Freeze frame, graduation day, caps in the air, smiles, families crying with pride, but zoom in closer. Look at their ankles. See those invisible chains? They're real, and they weigh exactly $37,574 on average. Some carry $200,000, and unlike every other debt in America, these chains follow you to your grave. You can gamble away millions in Vegas and declare bankruptcy. You can max out credit cards and get debt relief. You can crash a corporation into the ground and walk away clean. But student loans, they're different. They're special. They're the only debt that survives bankruptcy, survives death, survives everything except full repayment. This isn't an accident. This isn't a bug in the system. This is the design. Welcome to the architecture of modern indentured servitude, where an 18-year-old kid who can't legally buy a beer signs a contract that will define the next 20 to 30 years of their life. A contract they can't read. A contract they don't understand. A contract that transforms education from a tool of liberation into a mechanism of control. They told you it was an investment in your future. They lied. The moment you signed that paper, you didn't invest in your future. You mortgaged it. Let's rewind to 2008. Private university tuition, $25,000 per year. Fast forward to today, $60,000 per year. Public universities, they've tripled. Community colleges, doubled. Someone explained to me how the cost of delivering the exact same education has exploded by 140%, while inflation officially sits at 40%. The math doesn't math, unless you understand the game. Here's the mechanism they don't want you to see. In the 1970s, the government decided everyone deserves access to higher education. Noble idea, terrible execution. They created a system where federal loans became unlimited and guaranteed. Banks couldn't lose, universities couldn't lose, students, they became the product. Think about it. When you guarantee unlimited credit to an entire generation and tell them they must have this product to succeed in life, what happens to the price? It doesn't reflect the cost of production. It reflects the maximum amount of debt an 18-year-old can be convinced to carry. Universities looked at federal loan limits and said, perfect, that's our new price floor. Then they added luxuries, climbing walls, lazy rivers, administrative buildings that look like Silicon Valley campuses. Because why not? The students aren't paying with money they have. They're paying with money they'll earn for the next 3 decades. It's not a purchase. It's a promissory note on their future labor. This is what happens when you inject unlimited credit into a closed market. The asset holders get rich, the borrowers get crushed. And it's called progress. Between 1970 and today, the purchasing power of the dollar has dropped by 86%. In 1970, you could work a summer job and pay for a year of college. Today, you could work every summer for 4 years and not cover a single semester. Why? Because while your labor stayed the same, the price of the credential inflated to capture every dollar the credit system would allow. This isn't education pricing. This is extortion with a cap and gown. Now let's talk about what happens after you sign. After the ceremony, after the cap toss, after the Instagram posts celebrating your achievement. You wake up in the real world with $50,000 in debt. Some wake up with $100,000, some with $200,000. And here's the psychological cage they built for you. Can a person with $75,000 in non-dischargeable debt take risks? Can they start a business? Can they travel the world and find themselves? Can they join a startup that might change their industry? Can they speak truth to power when power signs their paycheck? No, they take the first corporate job that offers health insurance and steady payments. They stay quiet during meetings. They tolerate toxic managers. They swallow their ideas. They accept the raise that's 2% below inflation. They don't negotiate. They don't threaten to leave. Because leaving means missing a payment. And missing a payment means default. And default means wage garnishment, destroyed credit, and a lifetime of financial punishment. This is the feature, not the bug. The system doesn't want entrepreneurs. It doesn't want revolutionaries. It doesn't want critical thinkers who might challenge the corporate hierarchy. It wants compliant workers who show up at 9 a.m. because they have no choice. Your degree isn't proof of your talent. It's proof of your debt. It's proof that you're locked in. It's proof that you'll take orders because you have to. Debt creates dependency. And dependency creates obedience. The ancient Romans understood this. Debt bondage was how you controlled populations without physical chains. Make them owe you, and they'll police themselves. They'll wake up early. They'll work late. They'll smile through the abuse. Because the alternative is financial annihilation. You weren't educated, you were domesticated. But here's where it gets truly sinister. Your loan isn't just sitting in a bank somewhere waiting to be repaid. It's been weaponized, securitized, packaged, sold. Welcome to SLABS, student loan asset-backed securities. Remember 2008? Remember when banks took mortgages, sliced them up, rated them AA, and sold them to investors as safe bets? Then the whole thing collapsed because the underlying assets were garbage? They're doing it again, with your student debt. Except this time it's safer. For them, not for you. Your loan gets bundled with thousands of others, packaged into a security and sold on Wall Street. Hedge funds buy them, pension funds buy them, foreign governments buy them. Why? Because unlike mortgages, you can't walk away from student loans. There's no house to foreclose, there's no asset to repossess, there's just you, your labor, your wages, your tax refunds, forever. The investor gets a guaranteed return, the bank gets a guaranteed fee, the university already got paid up front, everyone wins except you. Zero risk for the institutions. Total risk for the 18-year-old who thought they were investing in knowledge. And here's the darkest part. The system needs you to stay in debt. If everyone paid off their loans early, the securities would collapse. The revenue stream would dry up, so they designed it to keep you paying. Minimum payments that barely cover interest. Forgiveness programs with so many requirements that only 1% of applicants actually qualify. Deferment options that sound like relief but actually compound your principal. You're not a student, you're a revenue-generating asset on a balance sheet. This is education as a financial product, and you're the collateral. So where does this leave us? Staring at a generation crippled by debt for credentials that don't guarantee employment, working jobs that don't cover the cost of the degree required to get them, living in a system that profits from their permanent indebtedness. But here's the thing. They don't want you to realize education and degrees are not the same thing. Education liberates. It expands your mind. It teaches you to think critically, to question systems, to create value. You can get educated anywhere. Books, online courses, apprenticeships, mentors. The internet has democratized access to information in ways that make the university model obsolete for most fields. But degrees are about institutional control. They're gatekeepers. They're barriers to entry that serve the credentialing class, not the educated class. The most valuable asset you have is your skill set, your ability to solve problems, your capacity to create value. And nobody can devalue that. Not inflation, not a market crash, not a degree mill masquerading as an institution of higher learning. Want to know why the system pushes everyone toward college? Because skilled tradespeople are scarce and expensive. Because programmers can learn online and skip the debt. Because once people realize they can acquire knowledge without acquiring debt, the entire education industrial complex collapses. Your value isn't in the paper on your wall. It's in what you can do, what you can build, what you can solve. And you don't need to mortgage 20 years of your life to prove that. Let me leave you with this final thought. The next time someone tells you that debt is good debt, that it's an investment in yourself, that you need this credential to succeed, ask them one question. Whose interest does this serve? Does it serve the 22-year-old graduate entering a market where entry-level jobs require 5 years of experience? Does it serve the 35-year-old still paying off loans while trying to save for a house they'll never afford? Does it serve the 50-year-old whose wages are being garnished because they dared to believe in the American dream? Or does it serve the bank collecting interest? The university building another lazy river? The investment fund trading your debt like poker chips? The politician who gets lobbying money from Sally Mae? Follow the money. Always follow the money. And when you do, you'll see that student loans aren't about education. They're about extraction. Extracting wealth from the young and funneling it upward to the asset holding class. This is modern feudalism. The lords own the land, the credentials, and the debt instruments. The serfs work the fields and pay rent forever. The only difference is we call it progress. So ask yourself, is your degree worth the chains, or did you just pay $100,000 to learn that the system was rigged from the start? The cage is real, but the key has always been in your hand. You just have to be willing to see it. This is Finance Through Time. We follow the money so you can follow the truth. Now, I want to hear from you. Do you think a university degree is still worth the debt, or is this the greatest scam of the modern era? Drop your answer in the comments. Investment or trap? Let's see where we stand.